Very warm welcome and good evening, everyone. Pleasure to be hosting this session. Uh, so this session will be more talking about the evolving underwriting space that we are talking about, and with the evolving technology and the solutions that people are using right now, the customer are actually more focusing on the personalized insurance policies that we are talking about. They are no longer interested in having a traditional insurance product. They are more looking at the customized solutions that they are looking at, and also personalized experience that we need to offer to the customer. And with the evolving technological landscape, let's delve into the importance of use of technology in the underwriting space. Maybe we'll start with Gaurav, just to understand that given the technological advancement that is happening in the underwriting space, how do we look at delivering the personalized experience from a customer standpoint?
At the foremost, I would like to thank ET Insurance for organizing this session and inviting us over here. Coming to your question, Pankaj, I think I would just put a background to it and contextualize this particular question. So if you look at the entire general insurance industry, while it is $34 billion, essentially, but most of the sales happen through a physical touch point. Whether it's an OEM, banker, manufacturers, agents, brokers, it's only 5% of the sales which would be purely digital in nature. And if you look at some of these particular areas, customers are generally using digital platforms, essentially, to buy insurance, more particularly because they have got used to using digital platforms. If you look at India, almost 100 crores of customers have internet. Close to 60 crores have smartphones. So a lot of them are using these particular platforms to particularly buy insurance. What it has also further accelerated is the use of the new age technology tools. So presence of IoT tools, like today, your watch may have health sensors attached to it where you can really customize it out. Your mobile has so many sensors attached to it, using which you can really create telematic solutions for your particular customers. In fact, there are drones which are being used to track and monitor plants and machineries at one end. So a lot of this data which is really present in the ecosystem, customized with technology as a particular tool, can be leveraged to create systematic AI and ML models which can customize products and services for our customers. Now, just to give you some examples of what we are really trying and doing in ICICI Lombard, I think we saw in some of the past sessions, we are using AI models where we have created chatbots to assist our customers in creating and buying policies, servicing their claims and endorsements, and lodging their claims on or putting in documents. Recently, we launched in health a product, Elevate, which is powered by an AI tool, which creates customized coverages as well as product based upon the customer profiles, whether it's income statement, whether it's dependent, whether it's location, and many other attributes we have really taken into account. Today, a mobile has multiple sensors, and using some of those sensors, you can predict the acceleration which is being made about a vehicle. You can really predict how many times he's doing a hard braking, what is his average mileage which he's really generating his vehicle, and then create attributes and customized products for the same. So using technology which is really available and the data which is available in the ecosystem, today it is much more convenient and accessible to create products and solutions and thereby services for our customers.
Right. And as Gaurav rightly mentioned, that a lot of information are getting captured through use of technology. And with the information, it's imperative that we use it in the right sense through use of data analytics and even AI and other technological advancements. So I'll go to Shashi to understand that given the technological advancement that has happened in the underwriting space, do you actually believe that we have evolved in terms of usage of such certain technology platforms? And if not, then what are the typical challenges that we see maybe enhancing the customer experience through use of these technology tools that we're talking about?
Right. Like, whenever we think about insurance, like whether it's life insurance or whether it's general insurance, the first thing which come in our mind as an underwriter is data. So, and when we compare other industries with insurance, I think insurance is one of the most data intensive industry, not only in India, in the worldwide. So be it underwriting, your risk assessment, your claim settlement, or maybe actuarial calculation, So data are getting used. So data is one of the most important segment, you can say, in this journey. Now, data has actually become the, you can say, has become the new oil for the industry. Now, there is no doubt that in the last few years, there is a lot of improvement in terms of using AI and ML, and especially data analytics in the underwriting. But if we compare insurance industry with other insurance industry, I think we are very far from giving wow kind of experience to the customer. Like we have an example of transportation industry, hotel industry, wherein when the customer books a cab and says, yes, this is the experience. That kind of experience is not there in insurance industry. Now, if we go by the last financial year figure, I think last year the industry got around 31,000 crore of worth of underwriting losses. So it shows that industry has got losses. It means we have got 100 rupees premium and we have paid 110. At the time of COVID, industry has paid, I think, more than 1 lakh worth of crores of claims on the health segment side. But still the perception says, the customer says that insurance companies does not pay claims. Even let's suppose if I am attending one event and whenever I introduce myself to someone, when I say that I work in insurance industry, they say, yeah, companies don't pay claims. This is the perception of the normal population. But if we see the last few years, the AI, ML has done a great job. There's no doubt about that. Underwriting has become automated. Fraudulent claims are now getting captured through AI and ML. Automated tasks, routine tasks has become automated now. There's a lot of improvement now. But there are still very good amount of pain areas also in this industry. Now, the first one is, you can say that data quality is not good. Now we have seen, I think, maybe around 20,000 worth of claims lying pending with the insurance companies and unclaimed. Why the same? So because the data quality was not good. When the customer came up for submitting the proposal, the nominee details were not getting captured at that point of time. Contact details were not right. So that claims are lying pending in the insurance company's account. So that is why the perception says that insurance company does not pay the claims. So this advancement of technology can play a very important role. There is no doubt about that. Now I'll give you my few examples. Now if you will drill down the data, you will see that maybe red car will have a higher claim ratio than the white car. This is what the data says. Those customers who purchase the policy in the night, they are having a better claim experience than those who purchase in the afternoon. This is what the data says. Females are better driver than males. This is what the data says. So the female should get more discount than males. This is how you can drill down the data. So, and now recently we have an example of IRDA coming up with some guidelines that every insurance company has to give a pay-as-you-drive add-on cover to their client. This option has to be given to the client. And when we drill down the data and when the industry drill down the data, it actually proves that those customers who drives less, they have a lesser claim ratio than those who drives more. Because there is a correlation between if it drives more, the chances of getting claims will be more. So those customers who drive less should get more discount than those who drives more. So this is all about data analytics. If any insurance company is not like using these kind of data analytics, I think maybe they'll get that kind of premium which is not profitable. So this is from my side.
Yeah, thanks, Shashi. And going to Dr. Porus, on the life insurance space, based on your experience, how do you see a life of an underwriter has evolved in the last 20 years? And given the technological advancements we just spoke about, what are the tools and technology that are available with the underwriters where they are responsible for multiple matrices from an underwriting standpoint, focusing on the life insurance standpoint?
Okay, thank you. And good afternoon, everyone. I'm largely spent about 2 decades in the life insurance space. So, you know, my next few minutes will be more around life insurance and specifically around some of the initiatives that we have taken at my current organization, which is Axis Max Life, right? If there are underwriters in the room, they would agree that over the last 20 years, correct, the perception by a seller of an underwriter has also changed. I remember when I joined, the seller with great difficulty used to get policies, and then we used to either reject them or ask for some documents, right? And we were called as bottlenecks, okay? Over the years, that perception, and it doesn't mean they were bottlenecks, but certainly if you refuse a policy, you're considered one. But, over the years, the perception changed. The underwriter was better equipped, correct? And then they started calling underwriter as an enabler, growth enabler. Now we reached a situation where, because of all the advancements, the underwriter is now called as a catalyst, which means actually helping the seller to get new business. Now let me explain why over the last 2 decades, this entire change of perception happened. Going back 20 years, 24 years, right, when we started the private insurance space, the underwriter had only a few things in his arsenal to take a decision, right? He had an application form, he had an age proof, some basic blood tests, medical tests, a medical examiner's report, and some financials, right? So that's about it, basis which he used to take a decision, which would then hold for the company for the next 20, 25 years, right? So that is how we used to manage. Excel-based data sheets were maintained. System downtime was not uncommon. And still he had to deliver to ensure that the company still makes profits. That's how it was working. Fast forward 20 years and look at what we have today, right? Besides all this traditional, conventional pieces of information, which of course is very critical even today, but look at the additional information that we have. We have AI-driven risk score models today, which means that today, if an applicant is applying for a policy, on the fly, real time, the underwriter gets a risk score based on various parameters which the AI model throws in, correct? It will classify, so if I get 100 lives coming in, it will classify the top 5, which are the very alarming risk, the next 5, which are the high risk, and the remaining 90, which are fairly good risk. So which immediately means the underwriter will now pick up only those top 10 cases, maybe send them for investigation, maybe send them for some video examination, but take some step, right? We also have information coming from the Information Bureau, right? IIB, the insurance bureaus. Real-time information, if the applicant has applied somewhere else and his policy has been rejected, which is not informed to the underwriter at the time of the current application, we will get the information real-time. Next, what else do we have? We have controls even at the diagnostic centers where we do medicals, right? For those of you who are handling the life insurance would know that pure term business is always almost often medically underwritten, which means that the person is going to a diagnostic center empaneled by the particular insurance company and goes through a set of medicals. We realize in the recent past that the mortality experience of a medically underwritten life was actually becoming similar to a life which was not medically underwritten. And we were wondering why and how, correct? If I'm evaluating someone upfront, how come I'm not able to pick up anything? How come the death is happening at the same time as somebody who I did not do any medicals at all? And we realized there is some element of fraud happening even on that side, which means the customer is going to the center, but it is not his blood sample that is getting checked. Or it is his blood sample, but the report is coming maybe from somebody else, right? So with the help of AI and tech, now we build a model where the moment the reports received by the underwriter, we get 3 pieces of information. One, it classifies this medical center based on the inputs of the medical center over the years. It classifies the medical center as platinum, gold, silver, bronze, which means I immediately know the authenticity of the report. Second, it calculates the health of the individual whose blood have been done. So I know whether he's a good risk, poor risk, very good risk. Third, it also has the ability to pick up mirror reports. What is mirror reports? Mirror reports is the lab send me a report of Mr. Shah just now. After some time, he sends me of some Mr. Kumar. Now the blood values are exactly the same, right? Typically, you would agree, it's not possible for 2 individuals to have the exact value across all kind of tests, urine, blood, everything. So what he has simply done is change the name, Mr. Shah, replaced with Mr. Kumar, and given me the reports. This model also has the ability to pick up such kind of fraud elements, right, which we call the mirror report. Now, this also means that the underwriter is now taking a much more accurate decision, correct? So we build models around that as well. In the recent past, we have been using information coming from the account aggregators, which certainly helps us from a financial underwriting perspective, which means that the onboarding friction reduces. I do not depend on the customer submitting me salary slips, tax returns, joining certificates, etc. I simply have to run the model. I have the information already. The model not only calculates what is the income of the person, it also tells me whether this person is eligible for the sum assured that he's asking for. So that's the level of technology that has come in. We have digitized all medical reports now, which means that we do not have the need for underwriter to go through and sit through and see all those blood values. So much so that only recently, 2 months ago, and we were the first in the industry to actually automate the decision of medical cases, which means that underwriter doesn't have to go through anything at all. The digitized reports come to us, and then a final underwriting decision also is given by the model. So, and that is required, right? Since morning, we've all been hearing about, Wixit, 2047, insurance for all. Certainly, the scale-up is going to be so high that no insurance company will be able to have an army of underwriters to manually sit and underwrite these medical cases, correct? There will be more and more dependency on tech, more and more dependency on automation, on AI, to actually have these decisions coming through a system. We also would appreciate, right, that for a life insurance policy, the opportunity to underwrite is once, and then you are locked in for the next maybe 20, 25, 30 years, depending on the term of the policy. So the role of the underwriter, as I said, has moved from what was perceived, as a bottleneck to actually a growth enabler, growth catalyst, actually helping the seller through analytics to even suggest where he should pitch a policy. Otherwise, the seller would not know, right, which is a better segment for him. Now the underwriter through analytics is able to tell the seller, hey, you know what, this particular pin code, this particular geography, this particular customer segment has a higher chance of conversion and a better mortality outcome. So why don't you, actually go and try to sell your products there? So I thought I'll share some of these use cases that we use for life underwriting.
Yes. Thanks, Dr. Porus, for sharing the insights. And as we have all understood that the technological advancement has significantly gone up from an insurance underwriting standpoint. And with the use of technology, it always has a negative impact as well in terms of things are being actually negatively used or used for benefits or certain additions as well. So maybe if I would request Gaurav, if you can throw some light on the fraud related elements, what are the opportunities and what are the challenges that we typically face, because through use of technology and bot, there's a minimal customer interaction. And if you don't interact with the customer, then the propensity of the fraud can tend to go up if the models are not rightly set up.
So, Pankaj, if you had asked me this question a couple of years back, I would have largely really said that there are fraud engines which really exist in the insurance industry which detect frauds and investigations are really carried out. But I think the accessibility of data and the presence of the data in the ecosystem can be both used positively as well as negatively. Today, there's so much of a data which really exists in the ecosystem that you can create sophisticated models, run it across to determine whether there is a fraud really happening or not. And maybe the frauds can be classified into two ways. One is a soft fraud and hard fraud. Probably a lot of times in the industry, the soft frauds really become acceptable to us. And the hard frauds is something which we really go after. But a lot of these algorithms which are run across can detect both the soft frauds and as well as the hard frauds. And to share with you some examples, today in the ecosystem, we work with so many service providers, whether it's garage, hospital, vendors, surveyors across. And today we can really predict to a fairly large attributes in terms of, is there a nexus which is getting created between a customer and a service provider, and the models really throw it off. Today we are able to really customize all our garages and hospitals into segments to indicate probably which are the ones which are far more cleaner, the ones probably where it needs to have interventions, or probably the ones probably which are the red alert ones, which we really need to abstain from really working around. Today there are models in terms of ICRs and OCRs which are really existing across, which allows us to detect or depict whether there is any kind of fraud which has really happened or tampering of the documents which has really taken place. So today, if there is a document which really comes across, has it been used in the past claims, you are able to fairly detect it out and predict it, that exactly similar document has been used. We have seen cases, especially on the motor insurance, where copies like RC, license have been tampered to change the numbers or to change the age to show the license validity. We have come across examples where the check copies have been tampered with account numbers to put financial gains into some other accounts. If you had asked about this question maybe a couple of years back, probably it would not have been possible. The sophisticated engines between AI and ML are able to fairly analyze lakhs of documents at its end to depict is there any tampering or fraud which has really been happening or not. I think the large other advantage which we are really getting is in the ecosystem, if you look at the government bodies, the regulator and the insurance companies, they are working very closely and interconnected with each other. And a lot of data is getting really presented across which can be used by the relevant partners, whether it's a government body or the regulator or the insurance company for its own benefits. I would give you some examples. Today, if you had asked a couple of years back, non-NCB claiming fraud NCBs was a challenge. With the use of data, one can fairly at the source of policy itself depict whether customer has really claimed a fraud NCB or is claiming a genuine NCB across. Similarly, if there are today in the system, if there are probably vehicle theft which really happens or total losses which happen, this data really gets shared across within the various insurance companies. And if the similar theft vehicle is being insured by another insurance company, it can be triggered really much faster at the source stage itself. So I think a lot of data is really getting identified and triggered. Another example was there were scenarios where two-wheeler insurance premium was being paid for commercial vehicle. It was going undetected, and there is lakhs and crores of fraud which is really happening. Using the regulatory information, today really we can depict whether the vehicle which is being insured is a two-wheeler or a commercial vehicle and the right premium is really getting charged across. I think the biggest advantage which I see for the insurance industry is if we are able, frauds are really present, but if we are able to minimize situations of fraud and the frequency of fraud, the overall cost of premium would come down, and that premium can be really passed, the benefit of the premium can be passed back to the particular customers. And overall, there can be a better experience for the customers which can get created. Because if you're able to identify the right segments where the fraud is happening, less amount of claims would have to go through those investigations, and a better customer experience can get created.
Thanks, Gaurav. Maybe Shashi, if you can talk about how the valuations are getting impacted through use of technology advances, particularly in the underwriting space, and if you can share some examples around that.
Right. Like when we say valuation, like the company valuation actually depends on various factors. One of the factor could be your top line, second could be your bottom line, maybe your solvency ratio, maybe expenses of management. There are many factors on which the actually valuation depends. Now, if we talk about the current status of the industry, the situation is not very good actually. I have earlier also I have referred about industry having 31,000 crore of underwriting losses, and there are around only I think 4 or 5 insurance companies are there whose combined claim ratio is less than 100%. Only 5. Solvency ratio of around 20 or maybe around 22 insurers, they are around 2% solvency ratio. Expenses of management, if we talk about, again 15 to 20 insurers are struggling with expenses of management. So why they are struggling? Because there are many insurance companies or there are many, you can say, stakeholders. Like for them, the USP is only pricing. They have always considered pricing as one of the USP for selling insurance. So I think if the digital technology or innovation in insurance come into picture, maybe customized product, personalized product, for the customer, I think definitely, because there's a direct relation with claim ratio and fraudulent detection of fraudulent claims. Like Gaurav was mentioning about, because fraudulent activities which is happening in the industry, it's worth around 30,000 crores. If you are able to remove those 30,000 worth of fraudulent claims, the industry will become profitable. Right. And then I was talking about like valuation depends on your claim ratio and your profitability, it is again interlinked with these things. If you will reduce your fraudulent claims, your claim ratio will come down, your profitability will increase, and then premium will become affordable for the customer. And once the premium becomes affordable, penetration will increase. And this will have a positive impact on the insurance industry. Now, there are few very, although I'll talk about the pain areas for the industry, but these are actually the opportunity for the industry. Now, if we talk about India, I think India is having one of the highest population in the world. But in terms of insurance, I think we are at 10th or 11th rank. Okay, in terms of protection gap, I think again we are having the highest protection gap in the world. Out of pocket expenses, again 45-50% again at the top only. So these are the opportunities which can create valuation for those partners, those insurtechs, those insurance companies who actually come up with different innovative solutions for the customers. Customized product, or OTC kind of product, pre-underwritten product, small ticket size product. So,
Thanks, Shashi. Moving back to Dr. Porus, if you can talk about what are the process and the risk that is coming out of digital advancement that we're talking about, and with the use case that being just spoken about, are we moving towards over-reliance on the technology? Is that what we are moving towards without a manual intervention that we are talking?
Do I have 2 minutes? 1 minute? Okay. All right. The host is quite strict here. Huh? Okay. Yeah, I think, so much has changed, right? I mean, so much of more information available. I mean, data sources are of a very high order, right? We spoke about IIB, we spoke about Aadhaar, we spoke about, the entire digital health mission. We spoke about account aggregators. And then, so data sources has changed. Models are more available now. AI, Gen AI, ML, Vision AI. In fact, just to let you know, even ECG and TMTs are now interpreted using Vision AI. So that's also automated. Sometimes this can be very overwhelming for an underwriter who's used to a very traditional way of working. So I think we also need to invest to ensure that, and underwriters are a large fraternity in the insurance sector. And we need to ensure that we invest in their growth as well, because it doesn't come very naturally to them. So how do you invest to train underwriters, let them appreciate, and firstly remove that fear from the mind that all of this is going to take away their jobs. Well, what was mentioned in the morning session as well, right? That's never going to happen. It's always a complementing way of working and building efficiencies. So train underwriters, let them accept, these new technologies. I think that's one. Keep a lid on it. The governance aspect is very important. Don't over-rely on things, correct? And at the end of the day, I think Gaurav also mentioned, we need to control the fraud, while mortality outcomes are dependent on what fraud controls you do. I mean, insurance is a business of utmost good faith, and we work on that principle. But unfortunately, you will always have those 5% of populations who try to, sneak in that claim, be it health, be it motor, be it life. And, as risk managers, it's our job to use whatever technology is available, at our disposal, and ensure zero fraud and better mortality outcomes. I mean, to conclude, we always say that it's better to sweat at underwriting than to bleed at claims. So, thank you.
Maybe I'll just take a minute more. Gaurav, if we can quickly touch base upon. So we spoke about a lot of technological advancement in the underwriting, and with evolution from traditional to the advanced, of course, it demands a lot of technological skills as well. When we talk about hiring an underwriter to deliver the right set of matrices that we're talking about. So if you can touch base on what are the current skill sets that we are actually lacking or we have in abundance based on your experience from an underwriting standpoint.
So I think quickly I would really like to put this into contextual and really frame it out. If you had asked me 2 decades back, the skill sets which was required were more to do with product awareness and product knowledge, be it motor, health, product line, because the products were largely regulated in nature. The next 10 years, which was the next decade, was all about understanding the risk segments, understanding the risk attributes, whether it was related to a customer, vehicle, the industries, the various occupancies where we were operating, because the products had got de-tariffed and the risk information was very, very important to really get into. I think we are currently in an ecosystem where large amount of information is available and can be used across. And customers are becoming more and more digitally oriented, and hence they are also looking at customization of their own products and preferences. And hence, to dovetail it out, it is important we start using a lot of machine learning and AI models to learn of those particular segments essentially, so that we are able to deliver customized products as well as services. And hence, some of these attributes in terms of skill sets, whether it's a product knowledge, whether it's an industry knowledge, and some of these models knowledge would coexist and continue to probably be implemented all together at the same stage in itself.
Thanks, Gaurav. Lastly, Shashi, if you can maybe spend a minute on your views on the recent regulatory changes and the amendments to the Insurance Act. I think that will be helpful for the larger audience.
Like if we talk about, let's say, the regulator has taken one mission, that insurance for all by 2047. We are also talking about 3 A's, 4 A's, 5 A's, your accessibility, affordability, awareness, availability. So whatever the guidelines have come for the insurance companies, I think definitely they'll try to achieve this target. Like if you talk about the master circular given by the regulator recently on health insurance and general insurance side, all the things which has happened in the interest of the policyholder. Like suppose now, as far as health insurance is concerned, like insurance company has to file a product for all ages group. You can't say that this person is having an age of 80, you can't give them a product. You have to have a product for all kind of ages, for all kind of existing medical conditions. And then there's a lot of mis-selling also. So IRD has also come up with so many guidelines. Like insured can come to the insurance company at any point of time and ask for the cancellation of policy. Free look-in period has increased. Pre-existing has become from 4 years to 3 years. Moratorium period they have reduced from 8 years to 5 years. And as far as amendment in Insurance Act 1938 is concerned, I think as somebody was referring in the morning that in USA there are around 5,000 insurance companies, 6,000 insurance companies. UK I think is having around 700 insurance companies. In India, which is having the highest population in the world, is having only 35 general insurance companies. So this is, if we go for composite license, definitely there is an opportunity. Penetration will increase. Then if we talk about reforms for agents, now agent can sell if I talk about POS, he can sell your general insurance product only for one insurance company, life only for one, health only for one. So those reforms is also good for increasing penetration. Then FDI, 100% FDI. It will also maybe create good amount of jobs. Maybe we can have some sort of global perspective. What kind of innovative products are prevailing in other countries, which we can also launch in India also. So I think whatever upcoming your amendments are coming, I think this is good for the industry. And it will have a positive impact, and it will definitely will try to achieve the insurance for all by 2024-7. That goal is there. Yes. Thank you.
With this, I think we have overshot the time by 10 minutes. Thanks Gaurav, Shashi and Dr. Porus for sharing their insights and valuable experience. Thank you everyone.